Welcome to the December 17th video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our nightly report. Hopefully it serves a nice change of pace as well as provides some insight as to how we set up our charts, what time frames and indicators we use. We try to keep it simple when it comes to our charts. We have a 5, 10, 20 EMAs, 50, 200 SMAs, a relative strength line versus the S&P 500, and volume. So that's it. Tonight's video shouldn't be that long as there's a ton of volatility in the market the past 2 days. We're 100% back in cash after stopping out at two long positions. And there's certainly nothing to do on the long side. And the short side is in play, but it's very tactical right now due to the volatility. And the setups aren't as clear as they were, several days ago or last week. So let's get started. The NASDAQ composite, ugly reaction to Wednesday's powerful follow-through day that generated a buy signal. The one thing we didn't want to see was an ugly reversal, and that's what we got. Volume was a little bit lighter, so not a true distribution day, but it certainly felt like one. Many of the stocks we were monitoring were crushed on volume. So a rough day. If the low of the fall through day is taken out, that would generate a sell signal. But we're not looking to buy anything, so we're basically on a sell signal already. In the short term, it will be important if the NASDAQ can hold this 15,000 area. That would potentially set a higher low. And on the weekly chart, there's just a ton of support in this 14,900 to 15,000 area, where we have the uptrend line with several touches that's been in play all year. And we also have the 20-period EMA, which has provided support all year on a closing basis. So a close below the 20-day EMA would be a changing character and cause for concern. In the S&P 500, technically a better looking chart, broke its downtrend line and cleared the 20-day EMA on 12/7, generating a buy signal. Put in another buy signal on 12/15 with a follow-through day. However, put in an ugly reversal on Thursday, almost a dark cloud cover day, and that's where we have a gap up and the price action takes out half of the prior day's advance if it's a strong up day. It did so intraday, but it did not close below the 50% level of the prior day's range. Still an ugly day on higher volumes, so a distribution day. And generally speaking, when there's a distribution day after a follow-through day, the odds of the rally failing are around 95%, I believe. Also, if the S&P were to take out the 12/15 low, that would automatically generate a sell signal in the timing model. The model portfolio stopped out of two half positions on Monday. Marvel triggered on a pullback to 87.40, but then took out the prior day's low. Wednesday was a bullish reversal session, a lower low and a higher high on a pickup in volume. And Thursday's response was just ugly, higher volume and a close below the 10 and a bearish engulfing look. We purchased ANET on a pullback to the 136 area, which we felt could be a spot where ANET would hold if the breakout was legit and if the market didn't fall apart. Unfortunately, the market did fall apart and ANET was a casualty. We raised our stop to just beneath the low of the breakout day, which ended up being a wide range day anyways, and for the price to be back down here, that's just there's just no reason for it. It's ugly. So we stopped out at 130. And the one good thing about stopping out early, we don't put much money to work, and so we don't lose much if the price reverses lower, where if something like this occurs on day 5 or 6 and after the fall through, then we might have more money committed to the long side. And just running through a few of these charts here, QCOM took a beating. AMD on heavier than average volume, though the pattern's not broken, it could still hold on to the 50 here. And the same goes to NVIDIA. If it can hold on to this 50 MA, it could just need some more time going sideways. Let's take a look at a few key ETFs. SMH with an ugly reversal candle, bearish engulfing day at the highs. After failing to break this downtrend line, closed below the 20-day EMA. And this was a significant close by almost 2% below the 20. Odds favor a test of the 50 coming up. And XLK, ugly reversal candle as well. Big volume. And that was the 1, 2, 3, 4, fifth time. It's really the fifth time it surged up to this 174 level and was rejected. And over to a few leading stocks. Tesla had an ugly response to prior day's reversal off the 950 area, but does have support around 900, which is the highs of the last base. So might be an area to look at here, and that would actually fill the gap created on 1025. So the gap would be around 910, and the prior high is 900. So the 910 to 900 area might be a spot to watch for a reversal intraday. Certainly this is something for those who are very active traders who can watch the market. As far as short setups go, our scans didn't reveal too much, and that's mostly due to the volatility of the past 2 days. But GFS had a bit of a reversal and has bounced into the 10. PayPal, which once again is stalled at the 20-day EMA, could be in play for a test of the prior low. ADSK, which broke down on the monthly chart beneath the prior low, reversed and bounced higher, bounced into the 20 once, failed, bounced into the 20 again and failed. A break of Thursday's low could lead to a test of the swing low, which would be about 8% away. All right, so just a quick recap. Both indices followed through on Wednesday and generated a buy signal, and both are in danger of reversing that buy signal with a break of the follow-through day low. Let's see if the NASDAQ can hold. If not, there could be more selling ahead. And it's just plain ugly out there right now for growth stocks, so there's just nothing really for us to do on the long side. All right, that's a wrap for tonight. Thank you for joining me, and we'll see you again next week.